Oh, wait, my glasses. Can you meet me halfway? What's going on? Morning, morning. Can you meet me halfway? Oh, okay. Close in. Relatively equal highs. So this is what my buy side will be. Buy side. I'll trade into this inefficiency here on the 15 minute. Ideally, I would like to see buy side be traded to, and then explore the probability of trading to the 50% of the opening range gap. This is the inefficiency that I'm talking about. Trade it to the 50% of it. Consequent encouragement from the first percent of fair value gap from yesterday. What does it have the date from today? It's yesterday's. So I want to see it close under it, touch it, and explore the 50%. Stop loss above this wick. Only if it closes under it. If it doesn't close under it, I am not selling. How does it behave on this wick? That's important. Does it close above the 50%? If it does, I'll have to wait for more information. I like that the facts that the body are respecting the lower part of that wick. there's a new day opening gap, so I think that'll be um, a good target depending on how we trade into the 50%. This will be the first percent of fair value gap from today. So now if we have a immediate rebalance, so I'm gonna put this here and let's see how it plays out, because if this formed the first percent of fair value gap from today, my opening shall be there. My entry should be there. So that's the business. And I like the way you traded to the 50%. It's going fast. You see, if it respected, that will not be ideal, and my stop loss will be above this because I want this to act as a wall and not let it get through. There's a small volume imbalance on my entry, should be there. So set a limit. We got the first percent of fair value got from today. And come on, give it my entry. That's what I'm talking about. I like the rejection on it. So let me label this as the first percent of fair value gap of today. Extend it throughout the whole day. Let's let it play out. I'll take a partial here. I'll take 5 off. Always trying to limit my risk. How's the 50-minute looking like? We took London low, so that's so since we took London low, I'm gonna limit my risk here. I think there's shall be good. I want to see it pull down there. We traded again into the first percent of fair value gap. I don't want to see it close above the consequent encouragement of it. Partial on here. I'll buy 5 here. 5. So since it did that, that is behaving like that, it might stop me out. But I like the rejection out on it. Beautiful, beautiful. Then to the 50%. Once you take this short term low, I want to see speed. Speed here. That's what I want to see. I don't like those little reactions. You can refer back to the 50%. Those levels, when they're important, prices is going to refer back to it. I don't like the reaction that it had there. I do not want to see a close of this candle above the 50% of that gap. And if he does, I might get stopped out. So 7 more seconds. Oh, that was fast. And there's no algorithm, they say. I don't like the fact that it's just consolidating around. Usually, like my interest to move fast. So if it doesn't move towards my direction on the next two candles, it doesn't matter where it is. I'm gonna close the trade. That's what I want. That's what I want to see. Next candle or next two candles, I wanted to take my partial. There we go. Come on now. Good. Stop break even. And knowing your model will deliver. Now, since it got all the way down there, all that will make sense to me is price to get to the new day opening gap. That's what it will make sense to me. But now, since I got a partial and my stop is a break even, price can do whatever it wants to do. Realistically, I don't really care anymore because we manage risk. We take partials. And never be in a rush to move your stop loss because let's say that I would have moved my stop loss to the top end of the first percent of fair value gap. I would have got stopped out there. Still valid because it didn't close above the 50%, but I would have got stopped out. So I used this one because I wanted to act like a brick wall in a sense. Okay, now so I wanna see willingness to get down here fast. So I'll put my stop loss here above the 50%. I want that candle to act as an auto block. 50% of this wick will be permissible. Come over here. Come over here. I know you want it as much as I do. Come on, Phil. 50% of that wick. Come on. So you want to stop me out, huh? Okay. I got stopped out. It got really, really close to giving me uh my terminus. It didn't. It's all good. It's all good. It's all good. They don't want to see me happy. But now, it's all good. So what was that? Mm, 500. Not too bad. 1%. 1%. So you don't, in reality, you don't need all of your trades to go to your terminus to be profitable or to have profit. Because if you know important levels or to take partials, that's uh that's really important. Got really close to my terminus, but I took partials. I reduced risk. Before, when I first started learning how to do this, I'm still learning, but when I was brand new at Rating Price, I thought that if I took a trade and scalp, well, this is a scalp scalper's model, and I always like scalping or day trading. I don't like to wait for a long time. That's why I said here that if he didn't show me that I want to move on my way on the next few candles, I was gonna close the trade because I don't like to trade in consolidation. I like my trades to have speed. I thought that if it moved in my way and I took profit, my full terminus, and then it went the other way, I thought that I did it wrong for some reason. that it will give me my fill as my take profit and then go the other way. And I will think that that was um that was a losing trade in my mind because the market didn't go in my direction all the way. But now to me that's a signature of precision and that I know what I'm doing. So like this execution that I took yesterday is just perfection. It was just so perfect. I went to the 15-second chart. What I wanted was price to trade to this relatively equal highs. We had relatively equal highs here in the 15 minute. So that's what I wanted. Did it give it to me? No, not really. Not here. But it still wasn't profit. This was my entry, the low of this candle. The very best low of this candle. Look at that. And my exit was the very high of this candle. So I should. So there's that. That's perfect. You cannot improve upon that. From low to high. Perfect. So it really did happen here. This is what I wanted to see. Here, this is what I wanted to see. And take this. But we saved it for the last hour of trading. We had this, the entry at 259. And we just start spooling, come down, fair value gap. Does the body close under it? No. And then we just pump it up. It's interesting how this body close on the relatively equal highs on the 15 minute, which is the part of this inefficiency here. So that's interesting. So now I'm not taking this trade, of course, but what I want to see happen is if we have the willingness to use this as a catalyst to take this relatively equal highs here, that'll be the next round liquidity. What what was my reason for taking this trade? We have a minor sell side liquidity here. We have this relatively equal highs, and we also trade into this inefficiency. There we go. So if it was going to go lower, in my thought process that was enough as a pool of liquidity to go down there. Another thing is that um, a pitfall that a lot of people have when learning how to trade is that, and I'm talking about me here, but I know that everybody that try to make it into this markets go through the same pitfalls, we can say, is that we go through a process of learning. Whenever we do something that is wrong, we continue learning, but we don't implement the things that we learn, in a sense that if it fails, we want to go back and learn more, and that's something that I did. If my strategy fails, I'll go back and keep learning. And what I really had to do was come to the markets and try to see, repeat, and get examples of it. I don't like back testing. I prefer tape reading, but you do have to do some measure of back testing so you can see it happen. multiple times so you can trust your model. The learning that never ends. That might be one of the reasons why people probably quit trading. They just want to things to work right away. You gotta spend some time with it. This is the type of runs that are like, there was nothing in here that gave me an entry. Okay. So yeah, another thing is that all your trades, if you have a model, they have to look the same, I guess, because it's one thing that repeats. That's how you know that you're implementing your strategy when all of your trades look alike and repeat. For example, this model has some variations of it. The one from the ticket that I took yesterday is that also I like to see this used as a first percent of fair value gap kind of, but I don't use this as an entry. It's a catalyst. I want to give you my entry after it trades to it to give me a fair value gap, a breaker, something to that extent or come off of it. And if there's a fair value gap close, I want to see it use it to go to relatively equal highs or lows. So once we trade above this, I want to see speed. I want to see movement. High, low, higher high, potentially bullish breaker here. The bullish breaker will be this whole thing. But the most sensitive is the first half. Does it want to use that as a catalyst to take the buy side liquidity? We'll see. There's a 1 minute inefficiency there. Let's see if you want to respect the main threshold of the breaker. Apparently not. Inefficiency here. Volume imbalance there. That aligns with the consequent encouragement of the first percent of fair value gap. So let's see if he wants to use that, go up, or if he wants to go below it and attack the new day opening gap from, it's from yesterday, but it's for today's trading. So I got 8,551 with 50 for me to be good to do a funded account challenge. That's a goal that I have. Once I do that on a demo, I can also do it on a demo that they're gonna pay me if I follow my rules and their rules. That's something that I don't really like about funded account companies, that when you trading with live money, there's not those stupid rules that you have to follow. Because let's say with Apex, with the trailing drawdown, this for them would have been a losing trade. The last portion of my trade, because I moved my stop loss and it stopped me out. That would have been a losing trade for them. But here, simulating a live account, it's profit. At least it covers commissions. But there is a losing trade. So that's why eventually, when I make enough money to find my own, to found, is that how you say it, found? To have my own account, my own live account, I'll move from prop firm to trading live. So these highs are really, really good. So I would like to see that being taken. So in my thought process, you can come down here to the first. I gotta stand at the in time. Stand to the right. Great. So something that it could do could come touch the first percent to fair value gap from yesterday, or wick to the one from today, and go to the 22,585 level. The market right now, the market is it's priming. It's letting these individuals up here think that they're safe, but they're coming for you. They are coming for you. So what I would like to see is, since we have this type of price action, right, and the next candle is about to close in the next 3 minutes. Let's say that if that it closed with a big wick, I want to see the next candle drop, touch the 50% fair value gap, and then fill the wick and take the liquidity. But apparently, signatures that it wants to run out. We had a immediate rebalance. Oh, another curious thing now that I'm thinking about it and I'm seeing this big run. At what time does it happen? It starts at, let's say it starts at 9:52. That's a 9:52 10:10 macro. It's just beautiful, ain't it? Another thing that I've learned is I can identify relatively equal highs now better. Because before, to me, relatively equal highs, if they were not, how can I say this? They weren't, if they were not really clear, they gotta be clear. But if they were not like really jumping out to me, I I wouldn't pay attention to them. For example, the one from yesterday is a great example. I wouldn't see this before I saw liquidity pool. So it's in the 50-minute looks better. So it was like this. So before I would not say this, I say relatively equal highs, but they are relatively equal highs. It's not a swing high here, but it is. This is the high of a candle relatively equal to the high of this candle. So that now really jumps out to me. So, like I said, uh, ideally, you know, I wanted to see Bryce taking this. I mean, trade to this first percent for value gap, but does it want to do it? I don't think so because you'll have to take the low of this candle. Still can do it, no problem. But I want to fill this wick. That's what I want to see. I want to see a willingness to fill this wick and take buy side liquidity and see what price do after that. Or if it wants to go lower, trade to the 50 percent of that wick, uh, consequent encouragement, and then go down. That's something that I really like about smart money concepts. That it's always if this, then that. When I was little and I was learning how to do the Rubik's cube, it's kind of the same because you have to follow an algorithm. So if you have a scenario, you do certain things. It's the same thing with this. If you have this scenario, you do this. If you have this other scenario, you do that. if you have a scenario um where the market it's really not doing anything, going sideways, you do nothing, and that's something that a lot of traders we gotta wrestle with because we want to be here every day, pushing the button, even when we don't have a, how will you call it, a good environment to trade. The market is shitty, like it was on Monday. Was it a Monday? I think it was a Monday. I had a losing trade. I pushed the button in a day that I shouldn't have. It was going sideways. It was ugly price action. It was not clean. There was a lot of wicks. So now that we took this two highs, I want to see if price wants to go fast. I wanted to see movement taking those highs. Nice. I would like to see this gap to stay open. Remember what I said 15 minutes ago, that I wanted to see this wick be filled in by the next candle. That must be random. That must be random. I mean, you cannot talk because the 15 minute hasn't closed. Okay. This is all the flow intro drill. Or the block. Let's grade this candle real quick. Main threshold. 50% of that wick will be permissible. Made a rebalance on the 5 minute. That's the one that really starts spooling towards the outside. I want you so badly. It's my only wish. So, so my hours of work, I mean, my hour of work is about to finish in 2 minutes. That's nice, man. Just think about how is it gonna be once I'm comfortable enough to put money into this after I'm sure or you know after I'm comfortable with this strategy. 1 hour of work. It didn't go to my full terminus, but that's 1%, $500 a day. Some days you're gonna lose, that's what it has. But you know, doesn't get better than that. It does not get better than that. So there's that. It was a pleasure to be here with you guys today. This is gonna be taken, most likely than not. And I'll see you guys tomorrow. Guys, I will see myself tomorrow. Oh, hold on. Hold on. Come on. Give it to me before we're done. I mean, before I'm done. Come on, Phil. Come on. They're watching. There we go. There we go. A beautiful